How's it going, everyone? Welcome back to another dividend investing video. We've been building a new dividend portfolio over the last 5 months here on the channel with weekly contributions and purchases. Today, I'm going to provide an update on the portfolio for the month of February 2023. The dividend growth income portfolio, I call it, as we are slowly but surely building up some passive income here. I'll show you all the activity in the month of February, including all of my purchases, dividends received, and what we can expect going into March. So let's get to it. I'm Nick, and this is the Dividend Growth Income channel. Thank you for joining me today. I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could, please do me a favor, smash the like button and subscribe to keep up with future videos. This helps us out more than you can imagine with the algorithm, so we can bring you more quality dividend investing content. Also, folks, just wanted to thank you as I'm just about to cross the 13,000 subs mark as I finished editing up this video. My next goal is to get to 15,000 by the end of March. Think we can do it? Alright, so if this is your first time watching one of our portfolio update videos, let me give you the gist of what we're doing. We started this portfolio in mid-September of 2022 from scratch, no money, here in Fidelity. I wanted to build up a portfolio on the channel so folks can see one possible way of building passive income starting with nothing and just making weekly contributions. On Wednesdays, I make my weekly contribution and my purchases. I'm dollar cost averaging from a selection of 3 ETFs and 24 dividend stocks, most of them dividend growth stocks. I've made purchases every Wednesday since we've started the portfolio consistently. Not a lot of money, but consistent. And today, about 5 months later, we've got about $5,000 in the portfolio. Alright, I'm going to switch to the spreadsheet I'm building for the portfolio. Let's start on the contributions tab. Every time I add money, I make an entry on this tab. This helps me keep track of the portfolio's overall performance. And there's a goal I set to get $10,000 into the fund, which is another nice feature of being able to track the money I'm adding. 2 months in, we're at 20% of the way to our goal. I like to be a little ahead and give myself some leeway just in case times get tough at some point later in the year. You never know what can happen. Now, as I did in January, every Wednesday in February, I consistently added $250 each week. I'd like to keep contributions at this level going into March. March does have 5 Wednesdays, so it's going to take a little bit more to meet that this month. So we'll see. This is the contributions page. Coming back into Fidelity now, I'll show you how I spent that $1,000 I managed to add through the month of February. So on February 1st, I purchased $30 each of the following dividend stocks: Amgen, Automatic Data Processing, Chevron, Kroger, NextEra Energy, United Health Group, Walgreens, and Waste Management. I also added $10 into the Vanguard S&P 500 Index ETF, VOO. On February 8th, I purchased $30 each of the following dividend stocks: AT&T, Comcast, Home Depot, Kinder Morgan, Main Street Capital, Mondelez, Procter & Gamble, and Snap-on. And again, $10 into the Vanguard S&P 500 Index ETF. On February 15th, I purchased $30 each of the following dividend stocks: Medtronic, Aflac, Agri Realty, Best Buy, BlackRock, Broadcom, Cisco Systems, and Lockheed Martin. And if you're noticing a pattern here, I also put $10 into VOO. And then finally, on Wednesday, February 22nd, it was an ETF day. The largest holdings in this portfolio are ETFs. $100 into the Schwab U.S. Dividend Equity ETF, SCHD, and $100 into the Vanguard High Dividend Yield ETF, VYM, and of course $50 into VOO. This is very similar to how I did January, just still working on building up some core positions as this is still a pretty small account. Alright, back to the spreadsheet. Here's a nice way to see all of our holdings sorted by weight, as I've been buying SCHD and VYM in equal amounts plus dividend reinvestment, and they're both performing remarkably similar. Got about $500 in each one, and together these dividend ETFs make up 20% of the entire portfolio. And then the S&P 500 Index ETF VOO, they're making up the other 7.5% of the fund. This does not have the dividend income of the other two, but think of this as a benchmark. We're having a significant position in this portfolio that simply provides us market returns. This makes a lot of sense. And then I have exactly $150 plus dividend reinvestment in the rest of the stocks here, the other 24. Let's quickly sort through this by performance to get a better look at how things are looking. Seems like we are about 50-50 red and green between all these stocks. And really, guys, I'm way more interested in adding to the ones that are red. If this entire portfolio is red, I'd be extremely happy to be able to build up these companies at lower prices. That's really what I want right now. Broadcom, Our strongest performer is up 13%. And notice I don't even own a full share of this, so don't let share price deter you from investing in companies you want to invest in. Fractional shares make this possible, and that's one of the reasons I picked Fidelity for this portfolio, and I'm very glad I have Broadcom as one of our stocks. Their dividend growth rate's phenomenal. And my next best performer is Main Street Capital. They've really shot up over February, up about 7.5%. In our portfolio, it's up nearly 12%. This is a monthly dividend payer. It's really nice to have steady, consistent dividend payments every month. Doesn't suck. And the third best performer is Best Buy, up about 10%. Now, out of all the stocks in this list, it's one I believe to be among the higher risk reward bets I'm making here for the long term. If you look at their dividend growth track record, there is a lot to like, but it's definitely one I'm going to keep a closer eye on, let's just say that. Now let's flip this around and see what's been hit the hardest. Both NextEra Energy and Amgen are down about 10%, and Walgreens and United Health are down about 9%. I'm going to be adding to all four of these positions in my next purchase, which is set for tomorrow. And I'm recording this after the market close on Tuesday, February 28th. And as you can see, there's still more positions here in the red, and I am looking forward to beefing these up. All right, let's look at dividend income we collected in the month of February. It's a lower month for the portfolio. We only made $5.06 in dividends for February. On February 1st, we collected dividends from AT&T in the amount of $1.33. And then on February 14th, I received 42 cents from Agri Realty. This is the one REIT in the portfolio and also a monthly dividend payer. We get dividends every month from them, and that's pretty awesome. On February 15th, I received 2 dividend payments. First, I got $1.81 from Kinder Morgan, and then 78 cents from Procter & Gamble. Finally, I received a 72-cent dividend from Main Street Capital. For some reason, it takes Fidelity like a week to process the dividends from Main. Does anyone know why this is? Now, this $5.06, they were all reinvested back into the companies that paid the dividends. Okay, next, let's look ahead to the dividend income I expect the portfolio to receive in March. Based on the holdings now, I'd be collecting $24.36. It's likely going to be a little less, as I may have made some purchases after ex-dividend dates. But this will be our first month going over the $20 mark, which is cool. This is just a 5-month-old portfolio, but we're already starting to see some dividends come in. I mean, just to compare how it looked here in 2022, here are the dividends we received. And to now see many of these dividend payments coming in over $1, not just a few cents here and there, the snowball is starting to build. As you can see, March, June, September, and December are the strongest months in this portfolio. And we're looking at 18 total dividend payments for the month of March. All of it will just be reinvested. And now our forward annual income is coming in just under $160. Pretty cool. All right, here's a view of how we are with diversification. 27.5% of the portfolio is in ETFs. It's right at my 25 to 30% target for this portfolio. The next highest is consumer staples, followed by financials, information technology, and industrials, each making up around 9% of the portfolio. My lowest exposure is to utilities at 2.7%, all of which is in NextEra Energy. And then real estate at 3.1%. I do most of my REIT investing within my Roth IRA, so I don't plan to add any additional REITs to this portfolio. Now here's also a look at how the income I'm expected to earn over the next year is spread out, both by sector and by stock. I've mentioned before that some might see this as too many stocks, especially for a smaller portfolio, but think about what happened with Intel last week and VFC a week earlier. I'd rather my passive income sources be spread around. Also why I'm putting a good chunk of this into ETFs. Okay, and so here's our main dashboard page. This is the overview of the whole portfolio. Interestingly, performance is just about flat in this portfolio so far. We've added $4,950 to the portfolio since we started it. We've collected $23.04 in dividends, which have been reinvested back in, and then there's probably about 90 cents of interest in that as well. And with a market value of $4,979, a few days ago this was actually around $5,100, but it's dropped in the last few days of the month. But as a long-term dividend growth investor, I'm really not worried about these fluctuations. The focus here is on stacking and making consistent contributions. Now here are the goals I have for the fund. We are 43% of the way to this thing making us $1 a day. That's really the goal for 2023. Right now, we're making a little over $13.32 per month. That puts us 13.32% of the way to making $100 a month. And And that is our goal for 2024. Now here we have a nice graph that depicts the dividend income we expect. And here I have the dividend income we've collected laid out. So if we compare this February to last November, which is 1 quarter ago, we made more than 10 times the amount of dividend income we brought in November. And I expect for May, we should be able to bring in about double what we did this month. Of course, I'm not going to chase yield for the sake of it to hit that. I just want to build out these positions in these fine companies. So this pretty much covers it. I have some good stuff coming in March, folks. This week, I still have to make a video about a Roth IRA investing update for February. So that should be out in a couple days after this one. Also, I'll have my weekly dividend recap series, which is coming out on Friday evenings, where I just give you a quick 5-minute recap of the latest in the world of dividend investing. So just be sure you're subscribed for that. I think I provide a lot of value there in a short amount of time for your weekend. Also, check out the link in the description if you want to get a deal on a premium membership at Seeking Alpha. Depending on when you're watching this, it could be either 50% off or 60% off your first year. But you have to use the link we provide to get that deal. And this is a site where I use to do a lot of my research. Now, if you aren't following me on Twitter, please find me there at DivGrowthIncome. It would be fun to connect. And until next time, keep investing.